What is up, App Nation? Welcome to another Friday YouTube live stream where we bring on a guest, break down what's working in the app space to help you bring in more downloads and obviously more revenues. And today we're going to talk all about scale, how to actually scale the right way. And joining me, it's a friend of mine that I've known for so long in the app space. He is the CEO and co-founder of Pollen VC, the company that's going to provide you with non-dilutive, so you're not going to get diluted in your company, capital to help you scale your mobile game company or your app company. But here he is. He is Martin Macmillan. Martin, welcome back. I think you're on mute, my friend.
Hey, can you hear me now?
Yeah, I was like, I just heard you. You just talked.
You've been muted. I'm like, I thought you wanted me to speak. Hey, Steve. Very nice to be back on the show. How are you?
I am good. I want to say hi to Yash. He's here. We got the Adrian here, LTV Money Tree. Love it. And then Miguel says, hey, fam. It's Fridays with App Masters, fam. For those of you who aren't familiar, Solanto, what's happening, man? And then we got Patrick who says, hello, Martin and Steve. All right, Martin, let's kick it off. So we want to talk a little bit about LTV. Really cool. I mean, here's what I've learned, Martin, through my business. LTV is the main number you should be looking at. I mean, that is the prominent number. If you want to increase your revenues, increase your LTVs, obviously increase conversions and all that stuff, but it is the primary number, the metric. And that's completely, when I focus more on the LTV of our customers, that's completely like dramatically increased our business by just focusing on this particular number. So I fully believe in it, but yeah, I'll kick it off. I'll let you lead our discussion here. Do you want me to show the screen?
Yeah, well, let's do a bit of preamble, then we can go through some of the tools and stuff we built for. Like, so if you think about it, so LTV is really like a North Star goal, right? It's how much you expect to make from a user or a cohort of users, if you're looking at it that way, over time. So how much revenue are you going to make? So there's two things that are really important in deciding if and when you're ready to scale. Using paid UA as a channel, which is basically like how much in and then how much out. How much money in is your acquisition cost, your CPA, however you're looking at it. And then the LTV is the ultimate amount of money you expect to recover. Now, LTV is not just a journey, it's a number, it's a journey, right? So if you look at it, you actually want to plot it out. Really, it's a curve. LTVs can be very short dated. You may extract all the user value in 30 days from a hyper casual game, or you may measure it in years, months or years, depending on the genre, right? So you may have some kind of utility app that you're extracting value. People keep paying for year after year, as opposed to like a game where people play for a week or a month or a year before they get bored. So LTV is not just a number, it's a journey. And it's really important to think about how long that journey takes you to get there. So at Pollen, what we do is we provide debt capital, we call revolving credit facilities, to help scale games and apps using paid acquisition. So one of the things we found, we've been doing this since 2015. So we kind of planted the flagpole in the ground on this entire kind of space in 2015, and the business was launched because I, as an app developer myself, couldn't find a financing partner who actually understood how this business worked. So the biggest challenge we see as a provider of debt capital is basically most people don't really understand how to figure out those economics. So over the years, I think we first launched these in 2017, maybe 2018. We have on our website here this sort of whole suite of calculators that is basically designed to help you visualize not only LTV, but also ROAS parameters, return on ad spend parameters, and visualize this whole thing effectively as a journey. So what we're going to do is I'm going to look at it here. Steve, can you hand over control to me? Because we're looking at looking at your screen rather than mine.
Here, there you go. This is your screen now.
Cool. Right. So this is mine. So this is a tool that we've had and we've been refining and so on over the years, right? And if we go back to first principles about what LTV is, it's obviously this amount of money that you're hoping to extract from users over time. And in doing so, what we're trying to visualize here is this investment equation. So there's three things I care about, because user acquisition in mobile is nothing more than an investment equation when you strip it all back. And the things that matter are how much in, how much out, and how long does it take me to get there? Specifically, how long does it take me to break even? So if I've got short break-even periods, that's great because I can accelerate my business faster. If I put $1 into user acquisition and it takes me a year or 18 months to break even, then it's going to take a lot more capital to get there. So what we have here is just this visualization of a user acquisition equation, if you like, which is really a curve. So what we start off with here in the top left here, we're using retention data. So we're pulling data out of any of the packages where you can pull retention info, and it's basically saying how long, after day 1, how many people stay in my app, after day 7, day 14, day 30, and right up to 180 days. So we're building a curve of how long people actually stay within the game or within the app. Then we're looking at two other things to give us the baseline. We're looking at ARPDAU, average revenue per daily active user. Again, you can pull that out of any of the analytics packages, and the base CPI, right? So this is, call it CPA, CPI, whatever you want to call it. It's the acquisition cost to actually acquire that user based on a cohort. Now below, there's a few other parameters, right? In order to start any kind of user acquisition campaign, you're going to need to have some money, right? So whether it's $1,000 or $100,000 or $1 million, you have to have some money to shunt the ship out of port. So we take into account here in helping you model this, how much you're currently spending, how much you'd like to be spending, and then also a couple of other factors, right? I don't want to get bogged down in this, but do you get organic users off the back of the paid ones? A couple of other things here around monetization types as well. So if you're ad monetized and you're working with an ad network who pays you net 60, that's going to take a long time before you get the cash out, before you can reinvest it. Or are you on Google Play, which is net 15? It's much shorter. So time really matters. And then lastly here, we're going to look at an interest rate. So which is if you were using external capital to support and pay for your scaling, then obviously the cost of capital comes into it as well. But let's focus just on this just now. So what we're saying is we're, based on this profile, we're looking at investing $1.20 and breaking even around day 33. So pretty short. And then after that, we start making a profit until we get to an LTV number of $1.97 after 104 days. Now, of course, the graph goes on here, but at some stage you have to call it and to say, well, look, at some stage the gradient here is so flat that I'm just going to call it off, when I think it's, I think this is the 90% level, something like that. So essentially it's just an investment equation. $1.20 invested gives me $1.97 after 104 days, giving me a profit of 77 cents. Far too many folks in this industry just focus on ROAS. Like at 100% ROAS, they think their job's done. Not at all. At 100% ROAS, which is the point that you've just recouped your ad spend, all you've done is you've paid Facebook or TikTok or Google or whoever enough money, right? Your profit starts after the ROAS is recovered. So it's super important to remember that. So we can play around a bit here. If I want to, for example, and this is always a feedback loop, right? Your product team, your BI, your finance team, your user acquisition team, everyone should be totally fluid and in sync with the expectation and the goal of improving these numbers over time. And so obviously, if you're able to make tweaks within the game or tweaks within the app, and you're able to keep people playing and paying for longer, that's ultimately going to drive more lifetime value, more long-term revenue. So for example, if we do something in the product that increases our day 14 retention from 8% to say 12%, what I'm going to do here is these curves are going to redraw, and it's going to mean that, okay, I'm still breaking even around the same point, maybe a little bit quicker, but my profit's going from 77 to 87 cents over time because I'm keeping people more engaged and they're spending more. So this tool here is really It's a completely free to use tool. We don't ask you for a bunch of data or anything. You know, it's a sandbox environment where you can model these numbers and try and arrive at your own investment equation. And there's basically there's 3 steps in this process of scaling a game or an app through paid UA. The first question you need to ask is, do I have a user acquisition machine? Right? So can I invest $1, whatever, and actually make a profit? Will I get my dollar back and will I get something on top? And unfortunately, for so many app developers and game developers, they just can't. The acquisition costs are too high for whatever their LTV profile is, and they just can't. So if you're investing $1 and you're getting 90 cents of LTV, then there's just no point in doing user acquisition because you're just setting out to lose money. If, however, you're investing $1 and you're making $1.20 or $1.50 or $2 or whatever, then great, you have a machine that works. In which case you move on to the second stage. And the second stage of that machine is, okay, we've got a machine that's working. How are we going to fund this machine, right? And the funding question is actually a really easy one. It's a really simple, dispassionate waterfall of different funding options, right? It's what we call the capital stack. If you look in our if you look in our blog, we have a very well-read article posted a couple of years ago called "The Capital Stack: How to Optimize how to optimize user acquisition." Maybe I'm just going to pull it up here. Actually, we can
Yeah, I got it up.
flip.
Right
So, and it's really just this, right? So you've got this machine that's working. So let's start off at the very top of the stack. If you're able to get credit terms, right? If you're on invoice financing where you don't have to pay for 30 days or whatever from Facebook or Google or TikTok or whoever, you should totally use that first because that's effectively free money. You could look at it as this is a risk transfer, an LTV recovery risk of transfer from you onto them. Now, the reason they give you credit is because they want to keep you spending more money on the platform over time, just like any kind of trade credit. But if you're being really diligent, it's effectively free money, and you should use that until you cap out the credit line, or you need additional cash to pay it back. So once you've exhausted that, you go down to the next one, which is your cash at the bank. So if, for example, I've got another game or an app that's throwing off a bunch of free cash flow that's sitting in the bank earning 0.5% a year or 1% a year, then if you can take that and deploy it into ads and make more than return you're getting in the bank, then rationally you should do it. Now, there's a bit of a distinction here between the money that you have from a free cash flow from a game or an app or something, and let's say the money you've just raised from a venture capital fund, right? So just because you've got $5 million in the bank sitting there doing nothing, if that money is earmarked for products and building teams and hiring team members and so on, then you don't want to be tying that up in user acquisition. So I'm gonna put an asterisk against the cash at the bank. The next one, and to be honest, a lot of people don't really focus on this, but we saw it a few years ago where people would try and use the interest-free payment on a credit card in order to fund their user acquisition. So some people did it really successfully, and there are a couple of people I know who'll probably never pay for another flight with their own money because they've earned so much money and made the points from it. But increasingly this has gone because there are too many factors, right? The interest-free period, when it needs to be paid, it was causing too much of a stop-start in how UA was getting funded. So then below that, you go to lines of credit, right? So you look at the type of credit facilities we provide are called revolving credit facilities. And the two things that make up the amount of available credit are, first of all, the amount of money that's trapped up in the payment cycles of the ad networks and the app stores. So that can be anything up to 67 days on iOS. It can be up to 90 days for some of the advertising networks. And so first of all, we look at that and we pull in all that data every day and allow you to borrow against it. The second is what we call residual cohorts. So this is basically the way to think about it is if you press stop on all your user acquisition today, how long does it take for all of your, or most of your users effectively to come out of the app or stop paying. So it's this long tail. You can borrow into the long tail. So below that, you get to the next, more expensive and slightly higher risk, right? So revenue-based loans are some of these guys that say, well, look, I'll lend you money, you put it into user acquisition, and I'll take a share of the revenues until I've been repaid. So that's typically, if you look at that versus, a revolving credit line, a credit line is based on things that have already happened, right? Either the sale has already taken place or the customer has already been acquired. For revenue loans, this is very speculative and effectively a bet on your ability to program user acquisition. So it's more expensive, potentially more risky, both for the lender and also the studio. And right at the very bottom of the stack, if the equation is still working and you've exhausted all of these other options, then by all means go and raise equity to put into it. But essentially, you're at that stage you're diluting your own ownership of your business, and it's very, very rare to see scenarios now that people need to raise equity because they've exhausted all these other funding options. So this is the concept of the capital stack. So it should be a very simple, dispassionate journey through these different options until you get back to your investment equation. So maybe we can flip back onto my screen, Steve, and I'm going to just show some of the other parameters behind it. So essentially, and again, if you have, we'll do a little quick tour of the tool. If you want to focus here, the different tabs along the top, you look at LTV and ROAS. So what I want to know here is, this is just focusing on my journey, on my ad spend journey. So I'm breaking even after 25 days. Anything I can do to get the break-even period shorter is just going to help me grow faster. And then also anything to increase that sort of LTV over time. It's going to mean I make more money. It takes me longer to recover it, but it's going to mean I'm going to make more. So what we're then going to look at is basically, if you've got these positive economics and you're looking to borrow to keep fueling the machine, I think the way to think about it is this. Steve, if you and I went to Las Vegas, which in fact we've done before, right? But not to the slots, right? So we go find the slots, and we find a machine that pays out $2 for every time we put in $1 into that machine, essentially, right? So this is our money printing machine. Think of it, this is our user acquisition machine. Wow. So the question is, we find this machine that pays out $2 every time we put in $1. Question: do you wait 30 days until the next payment cycle before you go back to that machine? No, you want to hit that machine as hard as possible until what will happen is, at some point, it will stop. It won't pay out anymore, in which case you need to leave that machine and stop putting money into it. So slightly crude example, but this is essentially it. Now, so let's say now that you're looking to borrow the money to reinvest into something. Now, there's a very simple equation here that comes into play, which is, what's my cost and what's my return? So we're going to come back to that in a second, and I'm just going to show you the modeling of a cash flow. So again, this is another classic mistake that a lot of developers make, which is confusing P&L and cash flow, which is an accounting term. So P&L is when you are booking the revenue, that every day you're looking at these numbers and stats. That's when you're clocking the numbers in your spreadsheet and you're seeing it booked. That's very different from when revenue actually hits. So you'll have this payment delay, which is going to really impact your business. So what we do here is we model a couple of different things. So we've got this starting balance of $100,000 here. So if you look at, based on these numbers, if you look on day 0, you have the red column is either way you got $100,000. Now what we're doing is, let's focus on the red line first. So what we're going to do here is we're going to take the $100,000 and we're going to spend it on a linear basis over 60 days. So that by day 60, if you look at the red number here, we've got basically Zero. We've spent essentially all of our money on ads, and what we're waiting for is day 67, we're going to get our first payday. So between day 60 and day 67, we go fallow, and then day 67, we get a bump. So in this case, it's an Apple iOS payout. And then what we do is we take all the money we've just been paid, and then we allocate it on a next 30 days basis to spend on more UA until we're going to get paid again. So what happens is you see this sawtooth pattern of like, I'm taking my 100,000 budget, I'm investing it as efficiently as I can, and then basically I want the day before I get paid, I've exhausted it again. So I'm using it as efficiently as possible. That makes us that gives us a spiky cash flow that makes us the red line. And then if you look at the cyan line on the top, all this one is doing is saying, well, look, what I'm going to do is every 7 days, I'm going to borrow money against my previous 7 days of revenue, and I'm going to reinvest it back into more cohorts that I know are ROI positive. So mathematically, I'm going to make more money. And so it enables you. So this is the idea of like, hey, you're paying someone a couple of cents in order to get the dollars to reinvest faster in order to make another dollar. If we go back to the slots example, right? So this is basically, and this is how some companies that have used these sorts of financing techniques have been able to grow, very substantially. I'm going to say a caveat here, because this is not either raise venture capital or use credit facilities, right? This is always a blend of the two. I mean, like a decent amount of our deal flow is referred by VC funds saying, hey, we've just seeded these guys $3 million. We don't want them to spend all their money and trap it in a user acquisition cycle. So can you come in alongside and provide this credit facility so that when they get economics that work, then they can hit it? But actually, really, to be candid, some of the best scenarios are where people are bootstrapping. They haven't raised external capital. They've got these economics, and then it just gives them more gas in the tank to grow. So it's basically, it can be a phenomenally effective way to scale, which brings me to the third part of the machine. So first part of the machine, to recap, is, do I have a user acquisition machine? Second part is, how am I going to fund the machine? And then the third part is like, how do I know when my machine's running at full capacity? Now, the full capacity argument is basically, it's just effectively demand and supply, right? So it's what happens over time is your acquisition costs are going to rise over time, and your LTVs are going to crest over time. So what happens is you're just going to gradually your ability is going to gradually be decreased over time until such point as the economics don't work anymore. So what we're looking at then, and I'm not going to get technical about it, but it's basically, if you're in a niche market, your acquisition costs are most likely going to rise pretty quickly. If you're in a very broad market, like a hyper casual game or something, your acquisition costs will rise by a couple of cents here and there, but you can increase your bids and have another 20 million potential users in your thing. So this is basically around sort of demand and supply curves, how niche your app is, etc. But that's basically the concept, right? How do you plot this stuff out? How do you map it? And then lastly, I'm going to go back to, and this comes down to, how do you scale it? So if I go back to my nice pretty graph here, $1.20 in, $2.08, 87 cents a profit, I'm all good. But what I really need to look at is just the brass tacks, just the math behind it, to see how I'm going to fund this most efficiently. So if I look here, again, this is much less pretty, but the fact is very factual, right? So our equation here is basically, I'm investing $1.20. I'm going to break even, an expected break even day of day 25. That investment goes on to yield me an LTV of 207 days, but it takes me 103 days to get there. So what we're looking at is basically, so if you look at it on a how much in, how much out basis, I'm making, call it 72.9, 73% return on capital, and it takes me 103 days. So that's great, but you comparing anything over 103-day time horizon is pretty clunky. So I'm going to break this down to a monthly return on ad spend. So basically what I'm going to look at, I'm just going to divide it by 103 and multiply it by 30. So this is something that's more comparable against different user acquisition opportunities. So I'm making a 21% return on capital on a monthly basis. So if I have to go and borrow $1 to put into this machine, let's say that dollar cost me 1.5% for the month. I'm still making a 21.2% return. So once I subtract the financing costs from the overall return, I get my adjusted financing costs. So this is the ROI after the cost of financing, which is you go from 21.2 to 19.7. So it costs you a little bit, but actually it's kind of fractional. The other thing is for every dollar you're paying in interest, you're making more than $13 in return. So that's what tells you is like, is this type of alternative financing a good way of financing or not? So that's, in helping people understand LTV and how to model these things, it's really, really important to have a handle on these numbers. Not only what the absolute numbers are, but how long it takes you to get there and what this running yield, if you like, of your user acquisition is over time. And then with knowledge comes power, right? So once you've got the right information in front of you, you can figure out how you're gonna finance it.
Hey, Martin, where do you guys fall right here? Where does Pollen fall? Is it the revenue-based loans that you guys fall in here?
A little bit above that. So the lines of credit. So
Okay.
what we do as a business, we pull in data, which is all from all the app stores, all the ad networks, and we work out what has been earned but not paid. And you can borrow as much as you want as that very next day. So it's very, very quick. And the other thing we've more recently introduced is what we call the cohort residuals. So if you press stop on all user acquisition just now, how much like long tail value is left in your existing users? What's the predicted expected value of those? And that's where you can borrow. And the real thing is, like, these events have already happened, right? Okay, with the cohorts, not all of it has played out, but the users have been acquired and you are at some stage on that cohort journey, right? Which is why it sits in the lower cost, less risk bucket than revenue loans, which are a kind of clunky tool, which is basically someone taking a bet on your ability to program Facebook and Google ads, right? So it's more expensive. It's a bit more hit or miss.
Yeah, I love it. I love how you're very transparent. Like, hey, look, here are the least expensive ones, and then when you're ready, you can come see us when you're in need right here.
Yeah, no, it's really important to us to help people make the right decisions. That's why we invest, all this time and effort building tools. We very often build scale up financial models and so on, because if you're just trying to shoehorn someone into making the decision, it's never the best outcome, right? If you're trying to effectively to persuade this is the best form of financing, but the user acquisition metrics are terrible, that relationship's over in 2 months, right? So it's way better for both parties to say, like, is this an effective way of financing? Are we a good fit for you as a financing partner? What can we do to be helpful in terms of modeling and scaling? And then, for our own business, sure, it's good when people are making informed decisions based on data and metrics.
Love it. Oops, let's see. There you go. Looking at this chart, I love having this data because I agree with you when you first said it. Like, it's just understanding math, right? That's what it is. Running a business, just sort of understanding the funnels and the math formulas. It seems like the net ARPDAU this calculator is more focused more on games. Yeah.
Yeah. So this is this is based on free to play, right? So it's a single shot model. We are doing some work at the moment on a subscriptions version because we're seeing more and more, and we're funding more and more, subscription apps, whether that's, health and fitness or lifestyle or whatever, right across a bunch of different genres. So whilst this is great for free to play games, it doesn't map it for subscriptions. So anyone interested in that for subscription apps, then, send me a LinkedIn message or something like that, and I will let you know when we've got something for you to take a look at, which is going to be pretty soon.
Yeah. Well, I don't have anything fancy like Martin, but I did put together this spreadsheet and you guys can Google YouTube it, and it's just the conversion rate analysis. And this is more for subscription-based apps and how we sort of calculate the simplified version of, it's not LTV, but I'm like, hey, you can only go up from this number. So we kind of look at revenue per download, and it helps you decide, because that's the thing, working with multiple clients in this space, Martin, I found that they just don't understand these numbers. Like, where is it that we can improve on the conversion side? Is it the, the paywall optimizations? There's a lot of parameters here. And then just understanding these numbers for them, breaking it down, being like, all right, here's the gap in your app. Here's how we're going to fix it. Here's how we're going to grow it. I've kind of put this together. And so this is very simplified. It doesn't have all the fancy stuff that Martin has up here, but it's more like just for you to understand the downloads, revenues per download, and how much you can invest if you're trying to get a 2 ROAS or 3 ROAS, or just break even. So it gives you a break even part number. This is the easy thing for me. Cool, Martin. Anything else you want to add on? As I was thinking about this.
I don't think so. I mean, it's just like, it comes down to this sort of like, what we're trying to do is to break everything down to brass tacks, right? And, okay, we're not, we don't get super deep in products and all the rest. So we've got our own kind of lane, which is looking at these metrics. Now, there's two things you can do. You can, if you want more clear blue water in that investment equation, you can either look for cheaper installs, or you can do things within the app or the game to optimize the LTV. So for a long time, you've seen people, it's just been about price. And I think now there's definitely a focus around saying, okay, how can we use data to understand player behavior or user behavior in the app or the game over time? And what techniques can we employ to keep them playing and paying for longer? So whether that's retargeting, or it's live ops events, or it's season passes, or whatever it might be. There's lots of different mechanics. I mean, ultimately, the accepted theory has always been that if you got good retention, you can figure out monetization. Yeah. And I think people are generally getting better if there's real, if there's affinity towards an app or game is delivering real value, then you can keep people paying for longer. Just maybe one last thing around forecasting, very, very long LTVs, is that and trying to provide some practical advice over what sort of app or game you want to you want to build. So focusing on the break-even time is really important. I'm just going to give you two bookend examples here. So one is one's like a hyper casual game. Break even day 5, make a 20% return by day 30. It all happens really quickly. Because you're breaking even very quickly. You can recycle money very quickly, and you get an outcome that's pretty certain pretty quickly. The downside is it doesn't have much longevity. So then you look at the other side. So you look at maybe something like a puzzle game or a merge game. They've got much longer life cycles, right? But let's say you wanted to to really invest and try and scale a game that's going to be
We lost them.
Or 3 years. It's just one of these games that gets baked into people's daily routine. So, we've had conversations with people looking, we think it takes, call it $100,000 a day of spend to really scale a game like this, right? Maybe it's more. So if you've got the scenario where your break-even period is so long, let's say it's 360 days, and then you've got someone wanting to spend $100,000 a day to get the game really well known and really embedded people, it's going to cost you $36 million of invested capital before your first cohort is projected to break even, right? So some of these, and this is how, in a changing world, right, in terms of, this time last year, there was a lot of VCs chucking big rounds, tens of millions of rounds into some, high potential, long LTV games. That's where the money is, all the rest of it. And I think people are realizing that when games take so much money to scale, then I think venture capital investors have got less appetite now for these really like long-term bets. They want to see results, more quickly. So that's not to say, 1 year LTV games are not great and can generate cash flow for years, but just the risk in order to actually get them up the charts and the curves to get them to that level of revenue generation, it just takes a lot more invested capital. So I think founders should always be cognizant of how much money it's actually going to take given the break-even periods. Now, sure, you may be able to fund some of that in debt and you don't have to do the whole lot of equity. That's great. But still, it's a bit like, if you could compare it to different crops, you could say I'm a salad farmer. I'm farming salad greens. It takes me 7 days from seed to market, right? So the worst thing that can really go wrong is my hydroponics blow and I don't take my, peppery rocket to market next Sunday. Easy, short outcomes, right? And then you've got like a really long-term crop. So I don't know how long it takes, like maybe a sugar cane or something like that. So you were talking about, not just a year, maybe it's even longer than a year. Now, okay, so I might be able to take that crop to market and make a lot of money out of it. But as a farmer, there's a long journey between when I'm planting the seed. I have to water it, fertilize it, nurture it all the time before it's actually gonna yield anything. Now, there are a lot of things that can happen that you don't have much control over, right? So you have, you can have droughts, you can have floods, you can have all sorts of unforeseen weather events and so on. That's gonna throw your ability and damage your crop. So I think, I quite like the farming analogy when thinking about it. How much is it going to take? How much nurturing before you're going to see anything off the top? And do you have either enough money in the bank or investors who share that appetite in order to get that crop to market?
Yeah, makes sense. Love it. That's a great analogy. I love it. I don't know if I've come up with the right plans, but I'm glad you did. All right, Martin. So I do want to ask you. You said you're working with more subscription-based apps as well. What is their main, I guess, problem that they're looking to solve? Like, what are you facing when you're talking to them?
With subscription apps, it's really the underlying use case is the same. People have figured out, okay, we've got something that's we understand these metrics. The money's coming in, and essentially they just need more capital to put into it. So, they've figured out they've got the machine is working. And whether that's a subscription app or it's a free-to-play game, whatever, it's the underlyings are pretty much the same. So they realize there's something that works. And in order to scale it, then it's just a case of how do I find capital? So whether it's going out and raising equity and diluting, whether it's using your free cash flow in the bank, whether it's raising a credit facility to fund it, the underlying problem's pretty much the same for those guys. One observation is it tends to be, with free-to-play games, it tends to be people want to really shove money on the fire and really try and scale it and make the whole thing go exponential, as we've all heard about. With subscriptions, it tends to be a longer, slower, flatter burn that people are looking at. So recognizing it's not something you go from 100 to 1 million to 5 million super quickly. But because you're building up this kind of nice recurring base over time, you can afford to do it a little bit more slowly. You don't need to overpay for users so much because you're building up with a subscription business. You're building more inertia in the flywheel. So if you've got something that your acquisition cost may be higher, but once you look at your churn of monthly or quarterly or semi-annual or annual users, and obviously the more data you have, the more comfortable you can get with setting your bids. Once you've got, like, for example, how many of my year ones renewed into year two, that's going to give me a lot more. It takes a long time to get that information, but it's going to give me a lot more certainty to figure out how I'm gonna keep spending. But I think the underlying kind of use case is the same for both.
All right, Samuel's here. I know you're late, but I want to say hi. Somebody from your team showed up, Martin, so that's good. And then Berkey's here. We got Adele, and then Debbie. Hi, very well explained. It's a good stuff there.
Thank you, Debbie.
One thing I did want to highlight was just this Adapty. Go check it out, adapty.io. They help you with the paywall optimization. But I did, want to talk about LTV. One of the things that I've discovered, just for those who are new here, when we talked about increasing LTV, especially for subscription-based apps, like think about the type of plans that you want people on. And the big eye opener for me was like the weekly is actually a little bit higher than the yearly. And I had a couple of clients actually tell me this, didn't actually believe them. And then when Adapty said the same thing, I was like, okay, I'm obviously wrong here. So think about how you can structure your plans. Think about what the pricing model should be. And that's what it really comes down to for subscription-based apps. What I found is messing around with obviously the paywall optimization, the onboarding, trying to those conversions, but also the pricing of the apps. And one of the apps that we've worked with, it was just an in-app purchase. We changed it to subscription, and we pretty much in month 1 made the same amount of revenues that they did in all of last year. And so it tells you the value of like really looking at the numbers and understanding what you can charge, what the market has seen too, and just a simple switch in the way you charge and not in the features, you're able to pretty much 10x revenues just like that. So wanted to end with that as well. Okay, let's get into the dad joke and the app audit segment of the show. And so if you guys want us to take a look at your app, just go to appmasters.com/audit, appmasters.com/audit. Now, there is a long wait. So put it in there. We'll get to it, especially if you're on a budget. We will definitely get to it, but just know that there's a pretty long wait when you fill out that form. Because I've gotten some emails, Mario, like, hey, I submitted this like 6 months ago. I'm like, we do 2 a week. Like, I'm trying to get through all of this. Okay, Martin, I got this little video. I don't know if okay, there's all right. Martin, you're the guest. You have a dad joke that you wanna tell us about? Or you want me to delete it off? And then in the comments, people are gonna vote. So M for Martin.
Of course, I'm a dad of 3, so I'm pretty used to it. I've got a good armory of dad jokes.
Okay. You want to go first? Or you want me to go first?
I'm gonna go first.
Okay.
How do you turn a duck into a legendary soul singer?
How?
Put it in the microwave till it's Bill Withers.
All right, I like it. All right, Martin. I've got this one. What do you call a bee that works for the government? Politician. There you go. I wanted to find something pollen bee related. Well, yeah. There you go. Yeah, Randy.
Like that.
On Randy. All right, we got Adil. I think Adil, you might be in the comments, or yeah, you are in the comments. All right, Adil, we're looking at your app. Let me pull it up. Here's his app. He does want help with ASO, but I wanted to kind of have Martin on here because he's pretty good. He's worked with a lot of games too, so I picked out a bunch of for them. So Adil, looks like you're just getting started because you only have 2 ratings, but mid-ages, okay. I'll kick it off, Martin, and interrupt me anytime. Here's what I like about this. It reminds me of other games I've seen, like, I forgot what they're called, but there's ones that I've worked with from Woonga as well. But like, I like taking a known gameplay and then trying to find, from an ASO perspective, certain keywords around this. And I don't want to reveal the clients we work with, but there's one client we work with where it was like a diner dash type of game, but he made it for a different category that he knew had ASO traffic, and so he ranks really well for that ASO. And then it's a well-known gameplay, so from a retention and monetization standpoint, he's already figured that out. So that's what I would do with Dill. It looks like a gameplay. I don't know, I haven't played it. We'll get into it, but it looks like a gameplay that we've known and it works in the space. It's just, do you find Middle Ages? Is it dragon? What do you got to do a lot of keyword research to figure out like what's a keyword that people aren't focusing on, and then go after that particular keyword, kind of like this other client did with Diner Dash. So that's what I would say from an ASO perspective. Anything you want to highlight here, Martin, from just like overall visuals or App Store presence?
I'm not the best guy to go like super deep into the visuals gameplay. I can offer an opinion, but I mean like we're a lot more kind of data driven, right? So I would be looking at once you get into the game, what's your retention like? I just focus on retention, right? So look at things like the apps fire benchmarks for your genre, see how you're doing, see what everyone else is doing, right? There are great platforms. We love working with the guys at App Magic for in terms of just app store research to see who's doing what. It's very easy to then look at the differential in ad creatives, in app store presence stuff. If you've got a platform you can go to, you can sort of compare these things, and it's always, sometimes it's the things that you never think that are going to make the big difference. So it's always going to be, a lot of different A/B testing, and just don't be afraid to try crazy things.
Yeah, I like that. It's all about retention. You said it before. It's like once you figure out retention, and the Cross She Road developer I've had on, he was saying the same thing. Like once you figure out retention, we'll figure out monetization. We'll eventually figure it out, especially for games. So here's what I'll do. Adil, like Alchemist, you kind of had that. I was just kind of reading through all this stuff. It's like, all right, cool. Like this could be a particular keyword. So I'll do some keyword research on that. And then maybe the game be called Alchemist as an example. Okay, so like here, I did see it. Alchemist right here, 27. So it's not bad, right? But it could be, the theme could be based off of that magic versus like what you currently have with Middle Ages, because you just put mid ages. But this might be a pretty competitive keyword. Seeing a lot of different games in this category. So you might not be able to beat these guys, but you might be able to win on the Alchemist. So that's how I start thinking about ASO, especially if you don't have a big budget. That's what you got to do. Okay, let's get into the game itself. Let's see if I can pull up the sound. And so Martin's point, this is what he's talking about. Like, hey, what is the retention? How many people make it through this first-time user experience? Feels like Monsters Legend. What, Dill, what did you base it off of? Cool. I need some votes for the jokes, guys. So everybody put M if you thought Martin's joke was better. Put S if you thought my joke was better. All right, congrats. You won your first battle. Let's beat them again. Start. That sucks. So, Adil, I'm trying to tap somewhere and I don't know where to tap. It looks like you're going to need some improvements for your equipment. Fine. Okey doke. Just have to keep tapping. What'd you feel about me losing the tutorial, Martin? I kind of didn't like it, but I get where he's going. Like, didn't like that I lost in the beginning. I'm a little confused. So, having played this, Martin, what kind of data would you want to see right now?
I mean, look, it's just about. I think you've got your onboarding experience. How quickly can you convince people, like, what should I be doing here? I mean, my kids get me to download games and stuff and try them and stuff. Half the time, I'm just like, I don't know what to do. So obviously, like, in terms of tutorials, just making it obvious, just like coaxing them through that journey. And if you can get them there and you can get to the point that they're getting some value, they figure it out, then you're gonna keep them. You're gonna get through that sort of big day one hurdle.
Yeah, agreed. Right now, Dill, I would want, that's the data I want. How many people make it through this long onboarding? It feels, now I'm not opposed to long onboardings because obviously, sometimes we've seen stats where people who make it end up being the best type of customers, best type of users. But again, for me, it feels a little bit long. I didn't like the fact that I lost in the very beginning either, unless you've got some intel that does work. But that's just my feedback right now. And it feels a little bit too long. So I'm curious to see where people end off. Hopefully you have some tracking onto to know where people are headed. Right now, it feels too much. Like I don't know how long I've been going, but I don't want, my feeling is I don't want to go any longer to this app. Like I'm done. And I didn't really read through exactly what I had to do. But if you have some stats, you'd be there. All right. Give me some stats. We're really trying hard. We are having a hard time finding, well, it's not easy. That's the problem with ASO. Either you already rank well for a certain keyword, or it's trying to do a lot of research to find those keywords in there. And then if you want me to take a look at the Android, just send that along with me. And then Joe gives feedback. The app icon isn't really conveying anything to me. There's some disconnect between the icon and the screenshot in terms of style. Take a quick peek on that. Yeah, agreed. Yeah, you got this person and the little characters. It's a little different. Good on you. And Joe's got some feedback as well. All right, Martin, I think you won the first round. Luke gave you, and then we didn't have too many votes, and Allison gave you the joke win too. All right.
I'm on
and then he says we will shorten the tutorial. Adil, I'm not saying you need to shorten the tutorial. I'm just saying if you have the data and nobody makes it through the tutorial, I'm just giving you my feedback. So it's just one person's opinion. But if you have the data that says, hey, bring in 100 downloads, 1,000 downloads, how many people make it through the tutorial? That's probably more indicative than just one man's opinion. Okay. And Adrian, thanks, Adrian. Shame in counting these votes. All right, Martin. Round 2. That's 1 for you. 0. You want to go first? Or you want me to go first?
You go first this time.
Okay. Again, these are all pollen related. So I found a lot of bee jokes. What do you call bees? Well, I'm sorry. What do bees like with their sushi?
Tell me.
Wasabi. There you go. All right.
Very good.
What do you got?
So I tried to keep this one a little bit more on topic for the audience. Why don't marketers like trampolines?
Why?
They're afraid of the high bounce rate.
I love it. All right. Vote. M for Martin, S for Steve. Let's see if there's a tiebreaker. We'll get into Bilal's app right now. Say goodbye. Hit the app and download. So doing a little bit better. So it looks like a car simulator type of game. We saw this, I think, a week or two ago, similar apps like this. So want some help on an ASO standpoint. I think, look, guys, if drifting game is super competitive, don't go after it. Like try again. Back what I said. Games I feel like are really hard for ASO, and that's why UA is so important. Like Martin said, understanding your numbers, figuring out what works, using the calculators from Pollen to really get a sense of what the game has, like what's the retention going to be, what's the monetization, all that jazz, because you're going to have to really drive UA for a game like this. Like, again, think about what is seen. The other game that we looked at last week was, I forget what the popular, maybe it was a Rolls Royce drifting game, but it was a Rolls Royce, simulator. So they are, stealing the brand. Like that is more interesting from an ASO perspective, despite the brand still than your Drift Bro drifting game. Like there's nothing here that's even interesting. So whether it's Tokyo Drift areas, are there popular cars that you can jump into and start really like muscle cars, type of cars that you might be able to rank for? That would be more interesting from an ASO perspective than you just trying to go after drift game or drifting bro. All right. Debbie's cheating. You can't do M and S. Come on, Debbie. You got to vote. Pick one. Sophie's choice. Okay. I don't know if there's anything else. But run some ads, man. Like run some Google ads and see how that goes. Okay, let's get into the game real quick. Yeah, tell me about App Magic, Martin. Okay, I like this. Here's what we have seen from a monetization perspective work really well is video ads on daily rewards. So allowed me to double up of daily reward by letting me watch a video ad. So if from a UI, it feels like I'm claiming this 500 coins versus my day one of 100 coins. Well, what happens? And then you show me an ad. Come on, this is the worst UI ever. Like, allow me to double it. Then I know going in that I'm going to be watching a video. It's annoying. I just want to leave your game already. I think you have to give her a raise, Martin. I'm new here. I have to side with my boss. Right now, I'm winning so far. Steve, are you going to tie it up, or are you going to, you're going to have to pick one, Deb? So, all right, let's take a look at this. Did I accidentally? So UI didn't know at those 5 coins. You gave me 100 and show me an ad. Bad, below, bad. All right. Let's get into next. See, now you let me watch video ads here. Oh, I got to buy. Oops, my bad. Let's just play this real quick. Oh, we're tied. We're tied. Okay, we need one more vote. So let's get into this gameplay. Okay, I like the banner ad here. Didn't know I'm going backwards. This is the problem with like a lot of driving games. The controls are just so hard. That crappy Android phone that I have, but feels very laggy. Well, and like too sensitive. Like if I'm just driving backwards right now, it just feels so sensitive. Oof. Yeah, I'd work on the controls a lot. Again, it could just be my crappy phone, but you are on Android, so there's a lot of devices you have to pay attention to. But this doesn't feel like a good, smooth gameplay. Let's just go straight. Oh, shiz. And the turning seems off. Okay, I'm out. Work on the gameplay. Figure that out because it's a little frustrating to play. That's what I would do. All right, more. We should go back to like non-games. All right. What's new on the Pollen side? You got Allison. What else is happening?
Yeah, we're growing pretty nicely right now. The market, the change in the market is actually a good thing for our business. I think for a long time there was a lot of people just thinking, oh, the VC market is just like everyone's chucking money at me. We'll just go and raise another 5 or 10 or 20 or whatever. And actually now what we're seeing is people are starting to be a lot more, hey, let's conserve what cash we have. Let's just be a bit smarter about how we fund it. So in a way that user acquisition should just be completely outside the sort of the capital decisions about, am I going to build a new game, build a new app, or whatever it may be. So it's just like you isolate it and you just look at it on a clean room basis. Is the machine working? But I think from a, we've been doing a lot of education. We've been building a lot of financial models with founders to show them how they can scale up. And it's kind of a little bit refreshing because it's been really frustrating watching people just raise money and big rounds of venture capital which just gets shoved into user acquisition, which they didn't need to do. Essentially what they've been doing is been giving VCs an equity return for taking debt risk. So now you're seeing founders start to get a little bit more smart about how they are thinking about financing their businesses, caring about dilution. Valuations are not so sky high these days. And so, yeah, just like there's a little bit of, more of a focus on just common sense, as opposed to like a super frothy market, which is, things always change over time. So, yeah, I mean, like there's a much over needed correction in financial markets. And from a founder point of view, it's good. People are starting to grasp the idea of capital efficiency and how they fund, and just caring about dilution, because it's important to make sure you hang on to as much as you can as you're growing your business.
Yeah, it's just easier too. You don't have more people to talk to. It becomes a bigger headache, in my opinion.
Yeah,
That's
it can
just me
take you
though.
3 to 6 months to raise a venture capital round. It takes like 7 to 10 days to put a credit facility in place. So if you've got something that's working, then you got to value your time as well.
You don't have another boss VC coming down on you. All right, so here just want to cover some of the pricing and eligibility to work with Pollen. So it looks like 25,000, right, Martin? Monthly revenues.
Yeah, we look for a kind of minimum threshold of about 25K a month. The most important thing is basically you've got a need for the capital, right? So, if you come and say like, oh, I'm about to go out of business, I need to draw a month's revenue, that's not going to work. Right? If you come to us and say, hey, we've got this formula that we think we can scale from X to 5X or 10X before the economics go, then that's great. There's one problem. There's one customer scenario which we love, which we call internally the hair on fire problem, which is when you realize that every day you're not taking out this money and recycling it back into more user acquisition, you're leaving money on the table. So we love it when we get a hair on fire customer coming in. In reality, most of them are they're in a soft launch phase, or they're testing, they're trialing with metrics. They've got some metrics, and now they're saying, okay, now we need to think about how we can do this sort of more efficiently.
Love it. Once again, it is pollen.vc, pollen.vc if you want to check them out. Martin, if the audience wants to connect with you in any other way, do you want to send them anywhere else?
The best way to get in touch, if anyone's got any, either on the subscription app calculator or any other questions, is probably on LinkedIn, and just mention just send a reach out request and say something about the Ad Masters show or whatever, and I'll make sure to respond straight away.
You can you can drop my name, you can drop Allison's name. That might get you even higher up too, and be like, hey, what's up? I saw Allison. So once again, it is pollen.vc, and then Martin's LinkedIn is linked up into the YouTube description as well. So you can reach out to him, say hi. You got a lot out of this, like Adrian did. Thanks, team. Lots to digest here. All right, for next week, we're going to talk all about Apple search ads. We've got the guys from Mobile Action and searchads.com. We're going to really break down campaign structure, the hacks to really grow on Apple search ads. Once you understand your numbers, your LTV, all that stuff, and you want to scale using Apple search ads, well, we're going to break all with you next Friday, same time, 9 a.m. Pacific. So join then. Martin, thank you so much for coming on doing this.
It's great to be here, Steve. Thanks very much for inviting me on again.
This was awesome. Thank you guys for watching. I'll see you next Friday. Have a great weekend. Bye.